The market warmly welcomes your progressive dividend statement this morning. You talk about a sustainable dividend. I want you to qualify that for the market. Should we expect slightly less payout as we go forward with a sustainable tag on it? Good morning, Ewen.
Good morning, Manos, and thanks for having me on the show. So we've announced this morning an interim dividend for this year of 15 cents and a dividend policy going forward from 2022 of a 40 to 55% payout ratio. It is a bit lower than what we were paying out in the past, but what we're trying to do is make sure that we achieve a sustainable balance between dividends we're paying out and retaining enough capital to grow.
So let's just cast forward, because you've got quite an optimistic statement here in terms of the Chinese growth story, 6 to 8%. That's where the pivot is. If the regulators approve, would you be willing to be more aggressive on the capital return this year in the second half and get to the 55% payout?
Yeah, I don't think so, Manos. I mean, we are recovering out of COVID. While there is some optimism in some markets, China is a good example of that. We've got good aspirations for growth in China this year. We had some very optimistic statements coming out of the UK yesterday evening, but it's all very much second half loaded, I think. So I think we're going to be relatively cautious during this year, and we're not going to be looking to augment the dividend policy with buybacks. But we'll take a view as we get towards the end of the year going into 2022.
OK, so that's a hint of caution there. You talk about materially lower credit losses, Ewen. We've touched on this a couple of times. Can you give me a new bandwidth on what materially lower means, and where are you going to see that material improvement?
Well, if you looked at 2020, we had credit losses of about just over 80 basis points, $8.8 billion. We can certainly see that in the next couple of years getting to at or below 30 basis points. So quite a material drop. I mean, we've previously talked about a normalized range of 30 to 40 basis points. We were obviously double the top end of that last year, and I would be surprised if we got to the top end of that this year, but certainly starting to trend down quite materially in 21 and falling further into 22.
If 2020 was, I suppose, hijacked by COVID, Ewen, and that will endure, are you and Noel and the team concerned in any way about the melt-up in equities or the risk of a taper tantrum? Is there a risk in these markets that we should be more cognizant of?
Yeah, look, the big challenge to us is really the shift in interest rates. If we looked at what happened over the last 12 years, last year, and why we're having to refresh our strategy a year on from a big announcement last year, it's really driven by interest rates going to close to zero. We've got relatively limited exposure to equities. Our investment bank is mainly a fixed income franchise. So it's the direction of interest rates, I think, which is the biggest driver for us on earnings and returns.
How high do you see those rates going in your model? 2%, 3%? What's the risk in 2021 on rates?
Well, we take a consensus view. We're not anticipating rates to show any material improvement until about 2024, 25. So what we're announcing today is a plan that we think can generate cost of capital returns in this rate environment.
And part of that is the pivot to Asia. What percentage, you talk about a significant increase of capital resources to Asia. What percentage of your capital will you allocate to Asia?
Well, if you look over the last decade, there's been a gradual shift of the business model towards Asia. We've gone from just over a quarter of our revenues in Asia to over 50% last year. We've currently got just over 40% of our capital allocated to Asia. We want to get that to over 50 over the next few years.
You also talk about investing a great deal in wealth management. You have a new title. You're in charge of M&A. So give me a sense in terms of that title. How committed is the board to seeking targets in Asia, either in wealth management or insurance?
Well, as you know, Manos, I was an investment banker for most of my career at Credit Suisse, so it was a very sort of natural additional set of responsibilities for me. I don't think you should see us going out and doing a whole series of major acquisitions. I think we're very focused on executing our strategy, and if there's small bolt-on things that make sense in that context, we'll certainly look at them.
The pivot to Asia and the restructuring, you've said to me, Manus, stop focusing on the number of job cuts that we're going to do, but you are keeping variable costs down. You've announced today in terms of jobs, 11,000 jobs were cut last year. Is the ambition still 35,000, approximately 15% of the workforce in cuts?
Well, as you know, we don't target FTE reductions. That's not, what we're targeting is to keep our costs flat to down. Inevitably, that will lead to some further job cuts. We'll speak to our people before we'll tell the market about that. But what you will see with our cost structure over the next few years is a shift towards technology spend as a total percentage of our cost structure. And it's that investment in technology that will then enable us to achieve greater productivity improvement. So we'll both be able to deliver better for customers in terms of the digital experience that we're delivering, but also be much more productive in the back and middle office.
The other thing the market is waiting to hear from, you gave us a line on France and what you might do there. How close are you to making a material strategy change on the East Coast business in the United States of America? Are you set to sell that business? Have you had any approaches? How close are we to a US restructure?
Well, in France, we're sort of getting towards the end of the strategic review we've been running over the last year. We're getting much closer now, and we would expect to have an announcement sometime over the next few months. In the US, we've said today that we are looking at both organic and inorganic options for the US retail franchise. You can see in the results that we lost about $500 million last year in US retail. That's not a loss that we want to persist with. So we are looking at all options at the moment, but we'll update the market when we've got something to say.
Ewen, you're the man in charge of risk. I'd love to get an insight on what you and Noel have discussed about Bitcoin. How important will it be to you? Are you making any strategy plays on it? Are you going to integrate it into the HSBC house? You are a Chinese bank. Your view on Bitcoin?
Yeah, so I think we have more confidence in stablecoin, more confidence in central bank digital currency. I think we remain cautious and skeptical about things like Bitcoin. So certainly, I think you can see with the Chinese, for example, pushing ahead with central bank digital currency. So you will see us getting involved, I think, in stablecoin. You will see us getting involved in central bank digital currency. I think we'll continue to be pretty cautious about Bitcoin.
Ewen, let's close off with one final thought. The pivot to Asia, we see lots of key names moving to Asia. 90% of the revenue heads will go there, private banking, wealth management. Will the chairman move to Hong Kong?
Well, actually, we haven't announced any management moves as part of today's announcement, Manus. I mean, I know there's been a lot of speculation. Noel and I certainly think it's logical to have more of the management team down there. 50% of our revenues and the bulk of our profits now come from Asia, and certainly the thrust of our growth aspirations are in Asia. So I think it's certainly something that we're considering, but I think we are a UK.
Do you think Mr. Tucker is considering? Do you think Mr. Tucker is considering a serious move? Would you and Noel welcome the chairman to Hong Kong?
No, look, I think Noel, myself, Mark, we're a UK domiciled company. This is where our headquarters is.